2024. Over in Japan, we have Nick Smith, who is Japan strategist at CLSA. Morning, Nick.
Good morning to you.
So we've been talking about US earnings season earlier. Japanese earnings season is also well underway. How's it looking?
It's actually not looking at all bad. So we're now basically done with the earnings season, done and dusted. The first 3 quarters of the year, net profits were up 57% year on year. For the quarter, net profits were 10% ahead of consensus, and companies have raised their guidance for the full year because we've got a March year end in Japan. They've raised the guidance for the full year by another 5%. So operating profits are now at all-time highs. It's not a bad quarter. So the GDP numbers out today were somewhat below people's expectations, but I think the corporate profits was doing reasonably well.
I mean, it's more than not bad. It seems excellent to me. I mean, 57% growth in earnings year to date. That's beating the US, isn't it? It seems quite astounding.
It's pretty good. I mean, obviously earnings had been badly beaten up. Yeah, perhaps you could say that in Japan we've had much less of the draconian lockdowns. Of course, they drive us all completely mad, but it's been locked down less than many places, and to a certain extent, life has been able to continue on.
And has that been a big driver of corporate earnings, the fact that you haven't had the severe COVID restrictions that other places have had, like here in Hong Kong, and also what you are doing now, you're really dialing back and sort of learning to live with COVID?
Well, I think so. I mean, to be fair, I think the strength in earnings has been particularly the globally influenced part of the business. So we can see that all the way through the last year, it's the international demand-related businesses that have been growing better. And still here in Japan, we've got things like retail not so strong, and the service sector still a little bit sluggish. But yeah, it's certainly not that bad. There's not that much to complain about in earnings season here in Japan. And of course, the beauty of it all is that they're all absolutely awash with cash. So when things open up, then we can look forward to the benefits of higher dividends and share buybacks, and perhaps some acquisitions.
And looking forward, how does earnings growth look going forward from here?
I think what we're going to have to deal with when we come to the end of the fiscal year, we'll have a whole load of fireworks with the company returning money to shareholders. But the first thing we're going to have to deal with is companies putting out very, very timid guidance for the coming year. And what we're going to see as a result is that analysts will lose their confidence and drop their forecast. So what we'll probably start off with is sort of 10-15% growth forecast for the following fiscal year, and then they'll start to pick up the numbers. I think people are not really appreciating the fact that booster rollout will really accelerate from here, that the border will be unsealed, that the government will be able to restart its stimulus measures for domestic travel. So I think we'll end up with much better than 10% growth in the following year.
You mentioned that companies have now got all this cash on their balance sheets, record amounts, and they're returning that to shareholders through buybacks and through dividends. Are they also increasing wages with this cash that they've got now, which is something the government has always been keen to do, hasn't to see? Is that happening?
Sorry, I lost you for just a second there. They what?
Are companies using all this cash that they have on their balance sheet, as well as returning it to shareholders, are they using it to increase wages, something the government has been keen to see happen?
Great question. It's a really strange thing in Japan that the focus is so much on keeping their jobs, and they're so worried about that they that the unions don't make large wage demands. In a country like Japan, where the working age population is dropping at a rate of about 550 to 600,000 a year, and already there are 116 jobs for every 100 job seekers. Once we come out of COVID, then you're really going to see the effects of a tight job market. So my fear is that the wage hike, the worst scenario would be there would be a tiny wage hike, and then companies would go straight into lack of employees, and you'd be hit on both sides. I think the Prime Minister is working very hard to avoid that, giving tax breaks for wage increases, and I think probably what we're going to see is somewhere in the region of total wage increases of about a couple of percent, maybe slightly more.
Nick, thanks very much. We'll talk to you again very soon. That's Nick Smith, Japan strategist at CLSA in Tokyo.